How about Seritage? This question is about the pandemic affecting Seritage's business. People visiting the mall less,
Yeah,
businesses going
yeah,
bankrupt, needing less office space. Can you talk about that?
yes. That is the highest level, that is the first level concern that everybody thinks about. And that's what actually provided the opportunity in the first place. So these are real. So there are a few types of properties here, and there are really Class A properties, and those are the ones in sort of bucket 1 and 2. And then there's properties in number 3 where they might not be the top properties in the world. There might be a rural Kansas Sears location that they would actually like to liquidate, and then they actually are they're calling it recycling their capital, and they're liquidating some properties in order to pay for the development of other properties. Certainly that fear is very real. Ultimately, a year or two from now, people will go back to some form of normal situation. I understand, there's WeWork, there's over commercial development. This is the whole reason that this is such a controversial topic. I will tell you that the shares prior to the pandemic were trading for 40. And when we started buying, they were about 6. So it fell from 40 to 6. And in fact, it was so interesting. And I was going through the debt scenario. So there's a lot of details that is just too much for this meeting, but they have 1.6 billion in debt. And that was the big concern. And that's what everybody was concerned about. But it turns out all that debt was provided by Berkshire Hathaway, and that actually Warren Buffett also owns 8% of the stock personally. And I started going through that debt in a lot of detail, and it was like painful, very painful, these debt write-ups. And so I actually wrote to Danielle, who used to be a corporate lawyer in New York, and I asked for her help and said, can you please explain to me what's going on in these multiple 100-page debt write-up? And she summarized it all and basically explained that it's actually, the covenants are really light. Berkshire is actually there more or less to help, and there's sort of 3 outcomes, and we're watching for each outcome. But it doesn't look like there's, if their cash levels dip below 30 million, for example, their interest payments accrue. They don't have to pay in cash. There's all sorts of things that are deeply embedded in these covenants that make it like a joint effort between their debt holders and their equity holders. So I'm not actually concerned about that sort of consideration. They are a prime property real estate manager, and they have tenants and clients that are growing and expanding. They're looking for places to move into. It's more a matter of when Sears can redevelop. So they don't want to move into the old Sears warehouse. It's places like Dick's Sporting Goods. It's places like AMC, which of course has its own issues right now, but will probably be around. It's places like restaurants, Chili's, and these it's Dave and Buster's. Okay, these tenants are expanding across the nation, and they're waiting for places to move into. And as soon as they move in, they start paying rent. And that's all that we're looking at and counting on, is how quickly can they redevelop these? And we really know the value. We have gone through property by property. There used to be 212, and we've analyzed the value of every single one on a fire sale liquidation basis, on a square foot basis. What could they get for it? And we come up with about $4 billion in property value. So if they were to just liquidate this entire portfolio and then pay off their debt to Berkshire Hathaway, they'd still end up with something in the $2 billion range. So this is just a really mispriced situation. The reason it's mispriced is because people do have that view and those concerns. What happens if the pandemic never ends? What happens if people never go back to malls? But it's, as long as the tenants are around, the business is going to be quite successful, and the tenants are doing quite well, and the properties are are really in good places. I'll also add one more thing that, I've left so many things out of Seritage just to make it simple. But one of the main drivers for this is that they're doing what they call densification. So if you've been to, no one here has probably been to a Sears in 20 years, which is why they ran into a problem. But Sears is a one-story warehouse level footprint. And so if you go to downtown Santa Monica, you see that they have 100,000 square feet in the middle of the most expensive real estate, some of the most expensive real estate in North America. And what they're doing is they're building up. So they're going to build a 10-story high rise and turn their 100,000 square feet into 1,000,000 square feet. They're doing the same thing in Redmond, Washington. They're doing all of these densification products where they have commercial on the ground floor and then they have residential, where they're building up. And so we're doing all our calculations based on just the footprint square foot that they have today, but they actually could end up with many multiples in terms of the revenue that they're bringing in. So I'm really confident they have a really great management team, but we watch very closely. And if anything changes, we will be comfortable selling calls and exiting. But right now it's really attractive. And as I mentioned, it's quite unique to find a situation where we're earning like 42% over a 17-month period selling puts on a stock we want to own anyway, giving us a 30% margin of safety. It's a pretty incredible situation. And by the way, sorry, but I will also add, there are, I'll just let you go and do your own research a little bit, but there are, we are not the only value fund in this position. There are a lot of great partners that own stock. So I mentioned Warren Buffett owns a huge piece. I think Manish Pabrai now owns 10%. I know Guy Spear owns a whole bunch of the shares. There's quite a few people involved that are well-respected value investors. This is a pretty great opportunity.